Most traders fail with smart money concept because they skip one of these three rules. If you understand these three rules, trading will become more easier. Welcome to TFS Academy, where we simplify forex trading using smart money concepts. Let's get started. Firstly, you have to identify market direction, right? Remember we said the trend is your friend. It's safer to trade with the trend. So you first have to identify the trend in order to roll with the trend, right? Okay, as you can see here, we're in a bullish trend. Price putting this low and this low putting this high. The price retraced and broke above this high, giving us a breakout structure here, which is a clear indication of bullish strength, right? In our previous video, we said whenever price breaks above a swing high is a clear indication of a bullish strength. Then when price breaks above a swing high repeatedly, it's a clear indication of a bullish trend, right? As you can see, price putting this swing high and the swing high putting this low and broke above. So we have another breakout structure here, which is a clear indication of a bullish trend, right? And remember we said in the bullish trend, it's safer to look for buy opportunities, while in a bearish trend, it's safer to look for sell opportunities, okay? So we're bullish. All you want to do is be a buyer here. You want to be a buyer here. You want to be a buyer here. Right price all the way to the swing high. You want to be a buyer here and right price all the way to this swing high. As you can see, price putting this low. You want to be a buyer here and right price all the way to this swing high. Okay, I want to pay attention to what happened. The price broke below the previous swing low, giving us an indication of a bearish strength. This is a change of character, giving us an indication of a bearish strength. Remember, when price breaks below our swing low, it's an indication of bearish strength. Then when price breaks below our swing low repeatedly, it's an indication of bearish trend. So you can see here, I had another break to the downside, which is a clear confirmation that price is about to move bearish. And now you can switch your buyers from looking for buys to start looking for sell opportunities, right? So let's dive into the chart and see how it really works. Okay, remember we said firstly you have to identify market direction, right? As you can see here, price breaking structure to the downside. Price continuously breaks structure to the downside. You had another break structure here. We have another break of structure. Price retraced and broke structure to the downside again. Retraced and broke structure to the downside, just like that. Okay, we have multiple break of structure. So let's just start marking from here. Let's see here, we had this swing low. The price broke below this swing low. So this is a break of structure. Sorry, let's get that fixed. Okay, so we have a break of structure here. And we also have a break of structure here. Let's restructure again. What happened here? As created is low. As created this low. This low put it is higher. As melted down and fails to protect this high and broke below above this high. So it's a clear indication of change of character, right? So this is a bad change of character here. Price shift from a bearish to bullish, right? So currently we have identified our trend. We're now in a bullish trend. This is a swing low. So this becomes our swing low and this becomes our swing high. As the highest point of price. Okay, now while identified market direction, not just only identified market direction, we've actually identified our trading range, right? We're bearish, then price switch bullish. So remember we say in a bearish trend, we look for sell opportunities. When in a bullish trend, we look for buy opportunities. So now we're in a bullish trend. Let's look for buy opportunities. Okay, so now let's identify our demand zone. Of course, we're in a bullish trend, right? For in a bearish trend, we'll be looking for a supply. While we're bullish, we look for demand zone, right? So let's look for potential buy opportunities. Firstly, we'll plot our Fibonacci from our swing low to our swing high. Then we'll look for opportunities below the 50%. As we can see here, we have this supply zone, the last bearish candle before the bullish movement. So let's say this is our first point of interest. BOI simply means point of interest, okay? Then we have another one here. I have another one here, but it has already been mitigated by this zone here, so it's not valid. Let's work with this. We'll be working with this particular point of interest here. So let's play price and see what happens. Speed things up a bit. And price almost tags us in. Let's wait for price to tag us in. Boom, okay? Price has tagged us in, okay? Next thing we have to do is to drop to a lower time frame to get our confirmation before our entry. Remember, in a bullish trend, price is supposed to protect our swing low and target our swing high. So right now we'll go to the lower time frame, wait for the lower time frame to align with the higher time frame, right? Higher time frame were bullish, so let's drop down to the 1 minute time frame and see what the market is actually printing there. As you can see, in the 1 minute time frame, we are bearish. Price putting this low putting this high. Sorry, let me clear this. This a bit clean. Okay, much better. So price putting this high, high putting this low, price retrace putting this high. This low putting this high, and the price broke below, putting a new low, low putting this high, putting a new low, this low putting this high, then boom. So you can see we're clearly bearish on the lower time frame, and our last structure was this break here. Zoomed in better, right? So our trading range on the 1 minute time frame is this swing low. I have this swing low here. Let me bring it down. Okay, this swing low and this swing high. So if price is supposed to continue moving bearish on our lower time frame, we expect price to take out the low. Or if the lower time frame is about to align with our higher time frame, price is expected to take out the high. So let's play price and see what happened. Boom, price took out the high. So what we'll do now is drop down to our 5 minute time frame to look for an entry. As you can see, this was the change of character. We had the lower time frame alignment. So all you have to do right now is mark out your entry. You have this beautiful bearish candle before the massive movements to the upside. So you can get into a trade here. You can set in your trade order. Let's fall back to our 15 minutes time frame so we get a clear view. Okay. So this is our entry zone right here. So what we do now is set your pending order or wait for market to get here, then you execute trade manually. Then take profits will be our swing high, because we said on a bullish trend, price is supposed to take out our swing high and protect our swing low, right? So now let's play price and see if price tags us in. Boom, price tags us in, and let's see what happens. Okay, I will extend this a little bit. Good. Then price hit our full TP, right? Price took out our swing high. So you can see here, it's that easy. You don't have to complicate things for yourself, right? Always remember, direction first, zone second, confirmation last, okay? If this video was helpful, do well to subscribe and like this video and follow us for more Forex educational content.